You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time for episode 2 of your bi-weekly options extravaganza, known as the Option Block, what the cool kids call the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating, at least we think so, Options Insider Radio Network. Man, is it scintillating this week. Hope you're enjoying double pro week. We had double pro Q&As on Tuesday. We had Ewan Sinclair, and of course we had the Spike's father himself, Mr. Simon Ho. We had double OPRs yesterday, with including a live huddle for all you folks to get at. We had options boot camp earlier this week on Tuesday. It's been just a bonanza of content for you folks on the pro side. You want to see what you're missing? You want to check it out for yourselves? Of course, get access to some of those shows that may have gone on already. Head on over to theoptionsinsider.com/pro, because you never really miss anything on the pro side, because then you get access to that cool pro podcast feed and you get it all in your hot little hands. So check it out. Theoptionsinsider.com/pro is the place to go. And of course, wherever you listen, live after the fact, keep rating and reviewing, sending in those questions. We do love to hear from all of you folks out there. And let's see who we're hearing from on ye old program today. First, joining us from parts unknown, because he's on assignment, but he's so diligent. He's so dedicated to you folks and to the program listeners that he's still beaming in while on the go. He is Uncle Mike TOSAW from St. Charles Wealth Management, beaming in from the mobile St. Charles studio today. Mr. Uncle Mike, hey, welcome back to the program. And whereabouts in these fine U.S. of A., sir, whereabouts are you located? You can give us a general location if you don't want people tracking you down for lunch.
I'm actually right by Chicago, quite honestly, so I probably could stop into your studio by the end of the show, quite honestly.
Well, there we go. So not that far from home yet, but eventually on the go. Welcome back, Mr. Uncle Mike. Then we go out to the land where it's stormy, it is dark, it is chaotic. It's a place where no sane human being would choose to live, except, of course, for the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the easy for me to say. Mr. G, welcome back to the program. How go things in the swirling land of darkness and chaos known as Maine, sir?
You know, TOSAW doesn't fool anybody. You know, all he's doing is driving to the nearest Portillo stand. I don't even know why this is a topic that we address.
His mouth did sound kind of full when we were talking. He had a mouthful of hot dog, I think.
He's just looking for his next meal. That's really what it comes down to. Ex-football player. He just wants to eat, you know. Anyway, actually, Maine is...
And that's bad because?
Maine is ruining your image once again because it is sunny and lovely and quite nice today.
I expect a cease and desist from the Maine Department of Tourism any day now. But until that happens, we shall keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Let's do it. Let's kick things off with the trading block, see what's lighting up our screens today. And it's been an interesting day, an interesting week out there. After kicking off a little bit tumultuous, a little bit of red, or a lot of red, really, on the screens earlier this week. Seems like the market has been kind of clawing its way back ever since. An aggressive rally right after that, and a little bit more rally on the tape yesterday. And coming into today's markets, it seemed like they couldn't really make up their mind at first whether we were going to be green or kind of mixed, and it was a little bit mixed for a while there. NASDAQ was actually in the red. Now coming into showtime, we're seeing all the major indices in the green, if ever so slightly. The Dow is a little bit more than unched. The S&P up a little bit over 0.05%, and the NASDAQ up now about 0.25%. So NASDAQ swinging firm into the green. Kicking off the show, we had VIX Cash at about an 18. That's, a mere, 6 points below our last show, close to it. VVIX is at about 120. So back down to, it's amazing how it just moves like glue to and away from that 120 strike. If it's something happening, bam, up to 120. And then if it gets another breath of vol and another breath of air in it, it can shoot up to, like it did earlier this week, up to in the 140s, 143. But then it goes right back down to 120 once things, quote unquote, settle down a little bit again. And then we have VXX was at about a 30.5 coming into the start of the show. That's off about 4.5 points. It was down about 5. Then it kind of got a little bit of juice back in it. And vol Q, aka the at the money vol of the NASDAQ, at about a 17.25. Puts it down about 3 3/4 points from where it was this time on Monday. So a lot of stuff to unpack, a lot less vol on the screen. But let's start before he fills his mouth full of Portillo's hot dogs. We all know there are no burgers at Portillo's. Mr. Uncle Mike, sir, what is lighting up your tape out there today, sir?
Hey, first off, I'm an offensive lineman at heart. So if I'm going to Portillo's, you can say the beef, the hot dog, what do you get? Why not get all of them? Get one of each. That's the way that I look at it. And if you want to get an extra burger as an appetizer, get a double cheeseburger to tide you over while they're making the beef, whatever you got to do, because it does take a little bit longer to get a beef than a burger at Portillo's. Only a true Portillo's customer would actually know that, such as myself. Anyway, with that being said, Monday, I really liked just to kind of go back to what Mark Sebastian said on our show on Monday. He said to really watch the close for Monday. And if you look at where the market closed on Monday, we really had a rush of buyers, probably the last 15 minutes or so going into the close. And they really haven't stopped since then. They have bought less starting today, but the sellers still have not come in as of yet. So as of now, we're just kind of taking a little bit of a break from the buying action. But holy cow, we have had a lot of bullishness going on for this week. I tweeted out earlier just saying it takes courage to actually buy the dip. A lot of people say buy the dip, but very few people actually do it. Everyone says, I'm waiting for a pullback. Then they get the pullback, and then they're like, maybe I don't know if I want. No, you had your chance. Pullbacks don't last long when markets go up by 14% in 6 months. So if you are a buy the dip person, this is a tough market because the dips that you get, you have to act very quickly, and you can't be waiting around to get the perfect buying opportunity. And that's what we had on Monday was our dip. Are we going to continue? Who knows? We're approaching all-time highs again, and we have a lot more earnings coming up next week, which I'm sure we'll talk about in a little bit. But we do have that at this point. So where I kind of positioned myself a little bit is I rolled down my put spread on Monday. I didn't get out of it. I just rolled it down, stayed in the front month because vol was high enough to justify doing that. And for my butterfly, I got out of the short. For my bullish butterfly, I got out of the short call section of the bullish butterfly. So I kind of didn't really add or take away any deltas. I just wanted to get out of the way of any more catastrophes in case the market dipped a little bit more on Monday. We still have the rally in the bonds, or the drop in bond yields, whatever way with which you want to look at it. We're off the highs that we had earlier in the week, but I think that is playing a big part with what we're doing. There's concerns. There's definitely some fear in the market, and the 10-year note is showing that. We're above 117 right now on IEF, and so it's going to be interesting to see if this can continue, because we were actually even higher in the bonds a couple days ago. And so if we continue, the bond market is showing a little bit of a flight to safety with it. Bitcoin got crapped out a few days ago, and it seems to be coming back. So we do have some buyers that came in for Bitcoin. So Bitcoin hasn't totally gone to zero yet by any means, but it's still hanging on to the levels with which it's hanging on to for the time being. So for all of our Bitcoin bulls out there, that's a good thing. And quite honestly, I think the big barrier, again, right now, from a number standpoint, is 4,400. I mean, it's slightly above the all-time highs for the S&P, and I think that it's gonna be tough for us to break through that tomorrow. But next week, we're gonna have some really good earnings numbers, because of the fact that everyone's expecting great things right now out of earnings. And with that, if we don't have what people are expecting and hoping and beating that, 4,400 is going to be a tough nut to crack. But in case we do, I'll be bullish, because that's just who I am. And that's what I'm seeing out there.
All this dip chasing is madness, sir. I don't even bother with that nonsense anymore. I had some VIX call flies. They look pretty nice. Took them off earlier this week. And I had some UVXY put flies. They look pretty good at the end of the week. Just took them off later yesterday there. So, yeah. I don't even bother with that dip grabbing anymore. That's for crazy people who eat burgers at Portillo's. Mr. Rock Lobster, I heard a little birdie just told me that the clam pirates may be buzzing your house. So if you have to run out and grab your shotgun, I'll understand. And then B, what's lighting up your tape in this world of vol coming and going, mostly going these days, sir?
I was worried because I thought my mic was on. So the one time I want my mic off because they were buzzing by in the airboat, I didn't want to disrupt TOSAW's his monologue on the glories of just ordering the right and left side of the menu.
They have an airboat, so you have like Louisiana swamp clam pirates then.
Exactly. Well, it's good for getting over the mud flats. But it is damn noisy at 5 a.m., that's for sure.
See, mud flats. I told you Maine was a dark and horrific place. They have mud flats. There we go.
However, the mud does heat the water, so when it comes back in, I actually have the warmest water in New England, ocean water in New England, to me. It's like 20 degrees warmer than everywhere else. It's crazy. But that's a side thing. That's
nothing like warm, muddy water. That's good stuff.
It is not warm and muddy, but we will let one day you will see it, and then you will tell me, wow, this is the nicest water I have ever been in. But what are we looking at? Well, we had again a bid for vol, we have some FOMC, blah blah, like all the stuff, right? Got the Delta variant. I kind of, I'm not going to go on the soapbox here, but we have a new president. Can we just get past the COVID-19 thing now? Like, the old one's gone. We got a new one. We're not getting rid of the new one. So let's just put COVID-19 in its place. It's a bad thing. It ain't going to go away. We got to go on. So as far as I think the algos read that, and you see like on a Monday when everything just falls apart, the bids go away. And that's why we have the volatility that we have. And it could be very well a while till we see that zone one anymore, right? The zone of the monk. We haven't gotten close in a year, nowhere close. And I don't think we're going to get there anytime soon, partly because of the market function we have, the way the liquidity is, all the rest of it, all the reasons that make up for it. So, and just like what TOSAW said, there's nothing. We're waiting for earnings. I don't expect to see VIX move more than 50 cents up or down unless, like some more funky news story comes along. And right now we're kind of waiting, like Apple's coming up next week. We've got a lot of the big tech coming up, and all of them are at just, 30 times multiples. It wasn't 50 times like it was in 2000, but they all are pretty, they have high multiples right now, and we'll see if the market wants to keep giving them a big multiple. But the second part would be like the sort of the inflation commodities. Like, okay, Congress is still dithering about, it's clear that one side wants to pass a huge spending bill and the other side doesn't. There's not really a lot of room for compromise. So they're trying to use tricks. It's kind of like Obamacare. Okay, we're going to pass this big thing and nobody else is going to vote for it. So it's kind of the whole idea of compromise on basically, which is just a goodie wish list. That's kind of why we have the current system of government we have. So just one side just can't get everything they want done just because they want it. So that is kind of holding. I think that's another vol thing, because it's a huge amount of government, like massive change in entitlements, massive change in spending that right now, whether you tax the rich or not, we can't afford. So I think that's definitely like a worry. And that is a worry on yields, inflation, all the other stuff on like how some kind of package like this can be funded. So, and I think all that just adds up. So you get kind of like this brew of, it's okay, but it's not great kind of thing. And I think that's sort of, as far as equity prices goes, that's how things are going. On the flip side, companies, they adjust so fast to changing conditions. I think businesses will continue to grow. And I still think this year we'll probably end up the year higher than we are now, depending if there's actual compromise. I think the market kind of likes compromise in Washington, doesn't like crazy town one way or the other. And I think right now we're waiting and watching for that, because there's a lot of shenanigans going on with the current budget reconciliation process, this process, that process, and it hasn't quite played out yet. So I think we're waiting, and then the market will judge one way or the other.
The market will judge. That's kind of what it does. It's one big judge. Let's see what the judge is issuing today, at least on the volume front. And, kind of a bit of a shrug in the shoulders out there in VIXLAND after a rock'em sock'em earlier portion of the week. Remember, you said that ADV on our last show on Monday, listeners, was threatening to break 400K. It was down around 414,000, I do believe. Today, 471. So that big spurt of action on Monday into Tuesday, they're really knocking that ADV back in the other direction, threatening the 500K level now. So a little bit better out there in VIXLAND, even though today, not so much. Like I said, only 214,000 contracts on the tape in VIXLAND. SPY doing a little bit more respectable numbers, a little bit more than half of its ADV on the tape right now. The SPY at about 2.05 million in SPY. The ADV is about just a tick under 4 million, about 3.98 million out there. The S, also kind of light, 482,000 contracts on the tape. The ADV, nearly 1.4 million out there now. So the S has been ticking up of late, not so much today. Let's see if the Qs are playing ball. The Qs are pretty active, 715,000 contracts on the tape in the Qs. The ADV, 1.3 million out there. And small caps, 423,000. So they're already pretty far along against their ADV, which is 660,000. If you want more small cap, stay tuned. We've got our good buddy Eric coming up a little bit later here on good old TWTR, a.k.a. the Dean of all things research, Mr. Eric Norland over there at CME. So he's going to break down all of his latest research. I think he's got just some hot off the presses. I think right before showtime in the equities, breaking down vol and how it's moving out there. So that'll be cool. I do believe metals is on his radar and a bunch of other products. You got to tune into the show to find out what his latest research is. Listen, he's got a ton of it. And he's always looking at vol and skew there as well. So if you're intrigued by such things, then by all means, check out TWTR coming up a little bit later today. If you're listening live, you're listening after the fact, just hit next on your device of choice. And then sit back with a nice cold beverage and enjoy. All right, going on out to the most actives. Let's see what the market is enjoying today from a volume perspective. Decently active day, all things considered. About 225,000 contracts. That's what it cost you to break into the top 10 today. That gets you to BABA. Baba back in the top 10 today. Number 9, Las Vegas Sands. Doing some paper out there today, listeners. They're off nearly $2 or nearly 4%, trading about 47 double out there. But that's good for 229,000 contracts. Got a feeling you haven't heard the last of Las Vegas Sands. They are post-earnings. They popped off earlier today. American Airlines, number 8, 251,000. They are also in the post-earnings blush. Number 7, the Amazonian, still hanging out in the top 10 there. Good for 263,000 contracts. Number 6, AMD, a.k.a. AMD, 329,000 contracts. Number 5, Microsoft, 331,000 contracts. Number 4, NVIDIA, all the way up to 481,000. Number 3, AMC, still doing the numbers, 503,000, just a tick under 500,000 contracts on the tape for AMD. That's not enough to tackle number 2, which is TOSAW, 632,000 contracts for number 2. That means the big dog still reigning supreme, still putting up the numbers. Apple, 1.32 million contracts on the tape. Stock looking good today, up $2 exactly right now. So not quite at those all-time highs again, but pretty darn close. 147, nearly a half out there. They sold off as low. It's like in the sell-off this week. It's like they got down to about 141 and change there, and getting all that back. Almost pretty much all the way back to the all-time highs again. And again, good for some serious paper. Apple putting up the numbers yet again, kicking everybody else to the curb. You know who else is planning to put up some numbers? It's Robinhood. People have been talking about this for a while. They have filed now for their official valuation here for official IPO paperwork. That's been rumored for a long time. We all know when we were talking earlier about the FINRA fines and everything else, part of the reason Robinhood is playing ball with all that, so they can kind of get all that out of the way so they could go public and sell themselves to the highest bidder out there on the public domain. Sounds like that highest bidder may be willing to pay upwards of $35 billion, at least from a valuation perspective. They're not selling all of that to the market, obviously. It looks like the expected range is going to be between $38 to $42 a share. They want to sell 55 million shares, so somewhere a little bit north of $2 billion is how much they plan to raise. I think one of the founders I heard is going to dump some of his shares as well. So he's getting the heck out of Dodge, at least for a portion of it. Not all of it, obviously. So interesting stuff here. Again, kind of bittersweet news. We talked about, what they've had to do to get themselves to that IPO level, and it's not exactly pretty. But there we have it. Let's see what the market does. We were joking earlier this week on the network. What if all the Wall Street bet kids come in and try to finagle some sort of great short of Robinhood after the IPO and try to crush it down to like $5 ish? That would be an interesting comeuppance out there, even though they already have sold $2.3 billion worth of the stock. So the early player is going to get their exit regardless, which is sometimes a shame in these scenarios. But let's keep on rolling out here. Let's see what was lighting it up this week. From an earnings perspective, it is kind of a hot week. We don't have, let's see, I think they're still crunching the numbers over there at Orat's Land, so we don't have the latest for today. We do have some names popping off, though. I'm sure they're going to come out like right after the show. Matt will send them over to us. We got Monday, we had IBM. Tuesday, we had Ally, Netflix, United Airlines, and Chipotle, formerly the stealth Apple. Now they're not really stealth anything. They're on fire. Wednesday, Coca-Cola, J&J. Thursday, AT&T and American Airlines. Southwest Airlines, Crocs, Intel, and Snap, and Twitter. And Friday, Amex and Honeywell. Let's see what we do have here. We have some coming up for the 19th. And we have the earnings report here, earnings season report so far. Looks like, let's see, we have so far the season shaping up at a pretty impressive 89%. But then again, we've only had a handful of names reporting, so I don't expect it to stay that high. We had reports here for Netflix. They were pricing in pretty much exactly what their straddle was. Their straddle and has performed in the past. They moved about $32 and change, and they were pricing in $32 and change. So it sounds like the folks out there in Netflix have learned from the past. They were at $530 as of their report going into their announcement. They're at $509.11 right now, so they're off about $21 from where they were as of this report, and their straddle was $32. So seems like they have net underperformed out there. Oh, what a surprise in this era. Let's go to United Airlines. They're on the 20th after the bell as well. They were $46 even going into this report. They were pricing in about $2.50. Again, they've also in the past have averaged out about $2.50 worth of movement. So seems like people are starting to dial this thing in Let's see. They're at $48, pretty much exactly right now. So they've moved about $2. So they have also underperformed their straddle. Again, we're going a little bit beyond the initial earnings move here. This is a little bit longer time horizon than immediately after the announcement, but I think you get my drift here. We had J&J before the bell. They were at 168, pretty much even as of this report. They're pricing in 371. In the past, they moved about $3. So a little bit extra juice. I think if you've been following the headlines, you know why J&J might have a little bit extra juice these days. And as of right now, they're at 170.30. So they're up $2.20. So they also have underperformed their straddle net, at least so far. I don't have the earnings move initially right in front of me, so they could have had a dramatic move immediately after the announcement. But going a little bit farther out, they have all underperformed out here. Let's go really quick. Let's look a little bit ahead to, let's go this morning. Let's go to Southwest Airlines. I'll actually be flying them a little bit later this week. My first airplane trip in, I don't know, about a year and a half. So that should be fun. Let's see. They were at $49.91, so pretty much $50 as of this report. They were pricing in $2.30 in the past. They moved $1.60, and right now they're at 51 and about a half, so they're up about $1.50. So again, underperforming. They're pretty much exactly almost in line with their past earnings movements, but underperforming. Their current straddle, I got a feeling when we get the new earnings season report, it's going to be a little bit lighter than 89%. Let's do Intel really quickly as well. They're after the bell today, so we're looking ahead a little bit into the misty, murky future here. They're at about $55 as of this report. They were pricing in $3.19 in the past. They moved $3.91, so they've squeezed some of that juice out of that balloon, and it's kind of hard to argue with that. A snap after the bell today as well, $59.31. They're pricing in $6.89 in the past. They moved $8.51, so taking all the air out of that balloon out there. So let's go to Twitter, one more as well before we keep rolling. Twitter, after the bell today as well, 66 and about a half is where they were trading as of this report. They were pricing in $6.84. In the past, they moved nearly $8. So, man, they are squeezing this stuff. At a certain point, listeners, they will not be able to squeeze it anymore. But for the time being, you can't argue that isn't the right play. As we keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let us unleash the Eye of Sauron, see what it fixes its gaze upon today. First, I said we're going to go back to them. It is Las Vegas Sands. Ticker symbol LVS. Trading right now right around $47.50, off nearly $2 or nearly 4% on the day they just had earnings before the bell. Let's go back a little bit farther, though. Let's go back a year. A year ago, they were trading not that far from where they are right now. They were trading $46.84, so they were a whopping 71 cents below where they are right now, about 1.5%. Net on the year, they've only moved 1.5%, but they've had some fits and starts along the way. And then they rallied from there up to about 53, then they kind of, in September, and then they sold off again down to 45. Hung out there for a while, gap back up to about 59 in November. Hung out there for a while, sold off again to 48 in January. And then almost immediately recovered and rallied back up to 65, almost 66. Actually, look, their high was about 60, almost 67, 66, 76 back in early March, right around March 3rd. Hung out there for a while again, and then pretty much sold off again to 59, and then sold off. That was in, looks like later in March, only a few weeks later. So the highs out here have not lasted too long. And then they sold off again in May, mid-May, to about 55. And they've been pretty much selling off ever since, down to where they find them today, right around $47.50. So there was some love for this stock, a little bit less love now. And net on the year, it's kind of like a rounding error. It's pretty much nothing has happened on the year, which is intriguing. But you know where nothing is not happening, to enforce that old double negative out there, Mr. Rock Lobster? It's in the options market. There is some paper afoot in Las Vegas Sands today. I think the only way you can really describe this, Mr. Rock Lobster, is to pull out one of our favorite terms. Yeah, it's a call palooza. What first caught our eye out here, Mr. Rock Lobster, was going out to May of next year. I don't see a lot of May 2022 on the tape, but we're seeing that today in Las Vegas Sands. The 62 halves. So an optimistic strike, to say the least. The 52-week high is nearly 67, so it's within that range, but it's up there. 35,000 of those going up for $2.32, pretty much lifting the offer there on the Philly. If you're wondering, that's about a 39 volatility. That was opening on the floor this morning. Stock was right around a little bit shy of where it is right now. It's 47.35, set about 47.5 now. But we saw that, so that's kind of a weird one. So we thought we'd look a little deeper to see if the Eye of Sauron could pick up anything else. And when we sent him back to look again, he also found the D60s went up at the same time. Now, these were not marked spread, but they went up at exactly the same time. So go figure. Probably if it looks like a duck and it quacks like a duck, probably might taste like a duck as well. It's 15,000 of the D60s also went up at the same time for $1.03 on the bid. So potentially a roll, Mr. Rock Lobster. If it's a roll, it's certainly a weird one. You're rolling your D's in July, and you're doing it to get 2.5 more points, and you're doing it over 2x, 35,000 versus 15,000. So it's a ratio roll of D's to May. That would be a weird one. Why you would do that now, I do not know. 37 vol pretty much there as well. So similar vol levels there. And that's not enough to gum up the works. About an hour before all this nonsense, we saw in Jan, so splitting the uprights between D's and May, they went up in Jan, nearly 15,000 as well, 14,775 of the Jan doubles, aka the Jan 55s, went up for $2.42 below the bid. So someone crushed the bid there, 14,775 times, also about a 37 vol. That could be completely unrelated. It is earnings day, Mr. Rock Lobster, so that could be something else afoot. But if it's all related, it certainly is a weird call palooza. That would mean someone crushed the bid on the Jan doubles nearly 15,000 times. And then about, looks like an hour and 20 minutes later, came back in and dumped out the D60s and then bought more than 2x of the May 62 halves. Riddle me that one, Mr. Rock Lobster.
You mean the reverse double roll?
Yes, the old reverse double roll. We've all been there. We've all done that.
This again, a curious trade where the thing. Did they close the D's? I guess is my first question. So I'm trying to ascertain.
Probably. I don't have it marked as openings. That's a good sign that it probably is closing.
Yeah. So they got out of some D60s,
which in and of itself is weird. You're bailing on the D60s now, and then then you're rolling, but you're rolling to the May 62 halves for more.
Okay, so that kind of was the. I mean, they're at least they're buying more time. That's the only thing I could think of where they're taking what they can get for their D's, thinking like, all right, these things are probably toast, but we're going to give it a try and see if we can get more happening in December and out to May, because I think the stock it did trade $62, so it's possible that they were holding those long-term calls. The Decembers, all of a sudden the stock's down $13 and like, wait a minute, what happened? And this is from May. And they're like, well, this sucks, because their calls probably went from, $6, $7 to $1.
They said, this sucks. You know what would be a hell of a lot better? Buying more than 2x of the May 62 halves. That would make it all better.
Right. And, and then everything goes back to normal with sand. So I think they're just basically they put down the 6-shooter and they picked up a
freaking shotgun.
Exactly, and they want to give it another shot. So that's what that trade looks like to me. Generally, I don't like throwing more money at losing trades, because then you sometimes end up with a lot less money. So it's not my favorite trade, but I hope it works for them.
Yeah, maybe those Jan doubles are related. We could probably assume maybe that they're not, even though they are the exact same size, which is weird. And it's a similar strike range. And usually when you see people doing more on the second leg, that's usually what we call a house money roll. They're sitting on some house money. They made some money. They want to put it back to work to make more money. In this case, looks like this person probably lost some money and yet still is doing more. So they are quite literally throwing good money after bad. Is that a bad trade? It's usually not often a good one, but we shall see. We shall come back to this one. And we shall see, probably before May, we'll have an idea. If past is prologue, he'll roll these Mays next week out to Deese again or something. Who knows? Speaking of rolling and closing and reviewing, let's go back a little bit, Mr. Rock Lobster. Today's paper was a bunch of sea of nonsense. We've had enough nonsense. Let's go back to review some of our earlier nonsense. In particular, we're going back about a month now to June 24th to one of our favorite names, Sea Limited, a Singaporean multinational technology conglomerate. It's a holding company for a bunch of, looks like Asian tech names, as well as a football club, which plays in the Singapore Premier League. I've been watching a little bit of Ted Lasso. I know I'm late to that party, and they're all about that Premier League soccer there. So I'm learning more about Premier League soccer. But I digress here. Sea Limited right now at about 293.60, off about 0.25% today. Not a huge mover for them today. Over the last year, it's been a pretty good mover, though. A year ago, they were trading 114. So, they're up about 150% on the year. Not a bad run for them. 178 handles to the upside. Looks like they did this already, though. They rallied pretty hard all the way to February, got up to 276. And then they kind of sold off again. By March, they were back down to 197. Then they shot up again to 272, right around again, that same level almost. In April, then gave it up again, back down to 202. So they sold off hard, 70 points, and then almost immediately rallied yet again. By June, they were trading 289 again. So this thing has had a few aggressive fits and starts along the way, but net, it's been all up on the year, even though if you had some gamma to scalp out here, you may have done all right. This thing's been moving a bit of late. Right now, we're back on the upside tip. Let's see what our Eye of Sauron found. Actually, back on June 24th, we profiled another Call Palooza. This time, listeners, it was probably not the most fortuitous of timing. This person came in on June 24th when the stock was at 296.5, so almost where it is right now, and pretty darn close to the 52-week high on this name. So they had a nice, or I should say, unfortunate real timing on this, because they came in and they said, you know what, this party is continuing. Here we go. Let's dive right on in. Vol be damned, pricing be damned, and let's buy a whole bunch of these July 320 calls. Or first off, we saw a 2,000 lot going up for a whopping $4.80, lifting the offer 2,000 times, nearly a 45 vol. Saw another 2,000 lot going up. Looks like around that time, the stock was bouncing around quite a bit, over $3 in a range that day. So they got some earlier for $3.75. And then they also got another 2,000 lot for $3.30. So it's like they averaged out somewhere around that $3.75 level. Total of about 7,000 went up on the day. So Mr. Rock Lobster, someone was really swinging for the fences in Sea Limited. I mean, 320, that's well above their 52-week high there. They never really got close to that. And it seems like this person, Mr. Rock Lobster, very quickly regretted their decision and saw the error of their ways, because a few days later, on June 28th, they came back in and pretty much vomited out about half of them back to the market. Unfortunately for them, they were trading for around $1 at that point. So they had already taken a pretty big drubbing. Remember, listeners, we say if you're going to buy premium, you need a big move. And on top of that, if you're going to pay outrageous levels for premium beyond the 52-week high, you need an aggressive move in your direction. This guy got an aggressive move, but unfortunately in the other direction. And he ended up vomiting out about half of them, about 3,500, for prices around $1. So he already lost about $500,000 on those. And then the rest, unfortunately for him, were still open on expiration. So it looks like he kept the love alive all the way through July expiration. And unfortunately for him, the stock closed at 267.60. on expiration. So not quite 60 handles below his strike, but pretty darn close. So sometimes, like we say, listeners, it could be a bit of a bridge too far, and that appears to have been the case. So he lost over $1 million on the rest. So you're talking somewhere in the ballpark of $1.6 million this guy shed on this trade, Mr. Rock Lobster. Unfortunately, that's a bit of an ouchie. Looks like he gave up quite a few of his girlfriend's Ferraris for this one, sir.
These just look like a lot of calls that went to zero, except for the ones they dumped for $1, unless I'm missing something.
Yeah, pretty much. That's pretty much what happened. Yes.
They totally lost. They lost a good Ferrari, not just one of those cheap ones. They lost a good one.
They lost a Ferrari and maybe throwing a few Lambos too. That they lost. They lost some cash there. That's a rough one. So
I don't get this stock at all. I guess all of a sudden, it's made a run. I know sea containers, all that kind of stuff. Blah 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 blah. I don't consumer internet. I don't get the whole. Anyway, it's it's an internet behemoth that is who the heck knows? It's a company that got very expensive very fast. So they were looking for a big pop because it has all of the important stuff. It's a Chinese company. It has technology. But I think as of right now, so the revenues right now of the company are about $2 billion, let's say $2.5 billion, and it's got $120 billion market cap. So I think they were just going for a bridge too far, I guess is the easiest thing to say, at least for this company right now. A little bridge too far.
A big bridge too far because it cost him quite a few Ferraris and or Lambos. Let's go a little bit closer to home, Mr. Rock Lobster. I think to a trade you may like a little bit more. Go back to June 14th. We were talking about BJ's Wholesale Club, ticker symbol BJ, of course. At the time, we profiled 16,000 of the July 40 puts going up, pretty much crushing the bid for a whopping 11 cents. Was a 40 vol. Looked like our old friend, the line in the sand put. The stock was at 47.77 when these bad boys went up, and there were no earnings in this cycle. The next earnings are on August 19th. And Mr. Rock Lobster, this one seems like it pretty much worked out like clockwork. He didn't get a heck of a lot for him, but what he did, he pretty much kept. These puts were never really in any danger. The lowest the stock got was about 45.5 during the life cycle of these options, and it closed at about 47.25 on expiration. So he kept all of his $176,000. That's no chump change. I mean, obviously, he got some margin tied up in that, so there's costs associated with this trade. It's not a free lunch, listeners, but he paid for his margin, got himself, maybe a decent aftermarket secondary Ferrari there, Mr. Rock Lobster. What are your thoughts here on this line in the sand put? Once again, working out, sir.
What can you say? Line in the sand put is, I don't know if you remember. Do you remember a guy on the SIBO floor, Irving, who used to go around and sell all the bikinis and stuff way back when, had a really nice watch collection?
Yeah, there were a few of those guys, especially when I was out in the S. There were a few of those guys. I knew one of them. He had a compound back east where I used to live. He used to take the plane back and forth to the East Coast with me to Chicago, and then all of a sudden he didn't have that compound anymore. Funny how that works. Those guys used to change jackets every, let's say, 6 months or so.
Yeah, yes. So anyway, it reminds me of this. So I think Irving did it pretty well. I think because I left in 97 when I left Chicago back for San Francisco. I don't know if he survived the financial crisis though. But he was pretty good at not selling options that could be something. But the line in the sand dude just reminds me of that type of person that just sells that stuff, has the ability to sell that stuff because the margin on these trades is pretty large. So they make 176,000, but what's the margin on selling the 40 puts? Even with PM, that's not a small amount. So that's 16,100. That's 1.6 million shares, right? 1.6 million times 40. Okay. So if you had to just buy the stock, that's $1.9 billion. I think that's the market value of the stock. So that's a pretty big chunk, right? If you look at it like that, 1.6 billion shares times $40 a share, 1.6 million shares times $40 a share is not nothing. And so you got to put up that money. So even if they equal, you know what? I can't add 64 million. So let's say they do on margin 50%, so that's 32 million. So it's 176,000 divided by 32 million. So their return is they're getting a 0.5% return on that trade. So and I would.
But
say
short puts are a free lunch, Mr. Rocklobster. I'm not sure if you heard that.
But they sold it on the 14th. They expired on the on July 21. So they're getting a 0.5% for a month, which it's probably better than a CD, or you get the stock at a much lower level. Obviously, $40 is a pretty good stock for BGL Wholesale Club. It's kind of a good level for that stock, I think, at least recently. So I see why they do it. It's a yield play, I feel, or they're going to get stock way below the market. And I think TOSAW would say, if you buy it really low and sell it really high, you have a shot at making money in this business.
Well, speaking of what Uncle Mike might have to say, a lot of people want to know what he has to say. So let's keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, so let's get to the mail block. Mr. Uncle Mike, a lot of our pro members want to get at you. First off, we've got Nichols in the live chat. He's I like this. He says, who gets burgers at Portillo's? Italian beef all the way. I'm with you. Actually, their beef and sausage combo is kind of my favorite. I've never been the biggest Italian beef guy, probably because I'm not a native Chicagoan. I'm an expat, so I come from the real Italian food back east. But Italian beef has its moments. But you throw a nice Italian sausage in there, now you got a combo with some hot peppers. Now I'm into it. But yeah, Italian beef is kind of the thing. Burgers, Mr. Uncle Mike, who gets a burger at Portillo's?
Hey, I was at Portillo's last Saturday, and I did get a big beef combo, mozzarella cheese, giardiniera peppers. It was delicious. So I'll get a burger, though, in addition to it. And I've gotten the burger and the beef at the same time, and I'm not lying. I really have done that.
I will admit, after Uncle Mike talked about burgers at Portillo's, the last time I was there, I did look for it. You have to look all the way down to like the bottom far right corner, past like the kids menu, and you can find couple of little burgers there. But yeah, nobody gets them. I agree with you, Nichols. All right, my boy Luigi, he says, Uncle Mike, you're talking earlier about buying the dip out there. It's courageous. You have to have courage to stand in there and buy the dip. He wants to know, so Uncle Mike is buying the dip on ETH. Is that courageous as well, sir?
No, only on the S&P. Anything else, if you trade anything else besides the S&P or the 10-year note or anything VIX, UVXY, VXX, like what the option pick guys do, it's just not wise to do.
Only S&P. That's what the courage. I hope it's courageous, Mr. Luigi. I may have scooped a wee bit of ETH on these downturns of late. Put it in the old back pocket for a rainy day. All right, next up, we got a comment here from Levi Keene. I was busy doing the show. This is the case. That's not good. He says, this seems bad. He says, Vanguard's down, Fidelity's down, Schwab's down, Chase is down, and Bank of America is down. Mr. Rocklobster, you got a lot of crazies in your chat. Are they reporting that all these brokers and firms are down, sir?
I thought they were all down like Monday. I guess he just sent you that note.
Maybe it's a late note. I didn't ask him when are you referring to, sir. I assumed he meant today.
Right. Let me see if Schwab. I thought everything was fine today, but I could be just horribly mistaken. Let me see if Schwab is down. I know Monday you could not put any orders into Schwab, and of course I'm trying to get out of my long ball. I was long some SPY put flies, and I'm thinking to myself, you know what? if I don't sell this now, I'm never going to have a shot to sell any of it. And like, Monday was the day.
Yeah.
If you did not get out on Monday, you were hosed.
It's like your VIX call flies. I had a bunch of those, got rid of all of them on. I missed them the last time. Luckily, I had enough time for me to get the second go around, and I got them the second time. You can't miss it.
Yeah. I mean, I did not want to sell them all, but I'm like, wait, this is if I don't do it, I'm going to be screwed. And I sold everything, and then I was happy, so I wasn't grumpy.
It's almost like you need to do broker arbitrage if you're a retail. You have to have multiple. I mean, we have multiple accounts because that's kind of what our business. We need to do it. But I mean, for the average customer, you almost sounds like you need to have a couple of brokerage accounts now just to arb in case one of them's down, because chances are they are.
I have two. So, but anyway, as of right now, it looks like Schwab's working. But I know on Monday you could not put an order in Schwab at all. And I'm surprised still that their web services can't handle the volume, but that's the way it is. I mean, everybody's trying to either buy the dip or get out or do something, and they mess it up.
And now they're the 800-pound gorilla in the option space. They own TOSS, they own OX. Good times ahead for everybody, listeners. Another one for you, Uncle Mike. This comes from Alan. Alan wants to know, what is Uncle Mike's criteria for covered call strike selection? Is it simply where he wants to sell the stock, or is there more to it? Mr. Uncle Mike, regale us, sir. What is your criteria for covered call strike selection?
I like going a little bit out of the money. I mean, so in the Uncle Mike perfect utopian covered call world, I like selling covered calls a little bit out of the money, and I like getting it to where I can get about a 1% monthly yield, sometimes a little more, sometimes a little bit less. I'm not a perfectionist with that number, but that's kind of the general rule I like to do. I like it also to where it's out of the money, so that way I can get a little bit of appreciation on the stock in case I get called away. And if it were to go down, then of course I get out of the short call or let it expire worthless, whatever I'm looking to do. Typically I get out of it when I'm able to get out when I can take 80% of the premiums profit as a credit, or 80% of the premiums credit as a profit. So ideally, I like going a little bit out of the money and selling for roughly 1%. The other thing that I like doing, that I've been doing a lot more of in the past 4 or 5 years, is selling call spreads instead of covered calls. So that way, in case we do get a massive rip to the upside, you're still getting some premium. You're not getting as much, but if you do get a rip to the upside, you get to be a part of it.
In case you get AMC'd, you got a little bit of that in your back pocket for a rainy day. All right, we'll wrap it up here with this comment from J3 Dingle. Says, hey, Mark, going back to the Robinhood IPO thing, he says, there is no justice in this world. Yes, Robinhood paid a $70 million record fine, but they are now supposedly worth billions and looking to IPO. The FINRA fine is just the, quote, cost of doing business, and the calls are way cheaper than the puts. Well, there you go. Yes, it's deeply cynical, but unfortunately, it is the world we are living in. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block, see what we're keeping an eye on our trading screens until we can gather here together on Monday again. Mr. Uncle Mike, we'll start with you, sir. What is on your radar for the rest of the week into the weekend?
X 4400, the 10-year note, and a ton of earnings next week.
Are you getting on the boat with the 10-year note, sir? Is that what you're doing?
I would really like to. I'm still bitter at Options Express Marketing Department for not letting me title one of my webinars that 15 years ago.
The bitterness, you can still hear it in your voice, sir. You know, you can't tell for the Rock Lobster because he's always bitter. Mr. Rock Lobster, sir, what is lighting up your tape heading into the weekend, at least until maybe Bob used tomorrow?
Bitter and not changing, by the way. Bitter and not changing. Never changing. The same thing as TOSAW. You've got like yields are diving again. It's like I just want the Fed out of all this nonsense. I want the market to trade. the opportunity, let stocks go down, blah, 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 make the government actually pay for all the money they borrow. Just like stop this freaking, I don't know, 60s boomer mentality on everybody getting what they want, not having to pay for it. Other than that grumpiness, I'm interested to see how this spending package plays out, the drama that's going on back and forth in Washington, to see and how it plays out for metals and commodities mostly too. Are they going to get a lift or not? So the beautiful metals are sitting there, I think, at an interesting place, but man, they have been Palookaville lately. And, and people that were holding them for kind of hot money have just bailed. I don't know if that's going to be an opportunity, but for right now, metals look a little soft, and that the Fed might actually do some stuff and pretend that they're going to raise rates and stop buying all these, stop buying all the, the financial instruments that they do, like bonds and mortgage-backed securities and stuff. So, let's just see how long that goes. But I don't expect a whole lot to happen into Friday tomorrow. Ooh, and maybe my crystal ball prognostication won't look so bad by tomorrow.
We shall see. A little get off my lawn action there from the Rock Lobster. Unfortunately, that music means we have to get off our own lawn. We'll be back, though. Remember, if you like to talk all things volatility and analysis and skew and maybe things like the metals that the Rock Lobster was just talking about, as well as equities and a whole bunch of other fun products. I don't even know how many products he has in his arsenal. We haven't caught up with Eric, a.k.a. the senior economist over there at CME, in a while, and he's had some pretty interesting stuff to talk about every time he's been on the show. So check out TWTR. If you're listening after the fact, just hit next. If you're listening live, you get some fun stuff pumped in there. We'll be back in exactly half an hour with all that goodness. But before we go, let's go back around the horn. Let's start with Uncle Mike before he has a mouthful of Portillo's burgers. Mr. Uncle Mike, sir, if folks want to reach out to you, debate the proper ordering etiquette at Portillo's, where should they go? What should they do?
Hey, I can honestly say I've paid more money to Portillo's than anybody on this show by tenfold. I am willing to bet. Anyway, with that being said, you can follow me on Twitter. I put a lot of content out there on the various strategies that I talk about on the strategy block at Mike TOSAW. Check out my website, stcharleswealth.com, if you're looking for a financial advisor who works with the option product very frequently.
I don't know. Have you done the Portillo's catering setup? Because I have. I'm just putting that out there. I don't know. I don't know if you want to go down this road with me, Uncle Mike.
I have.
You may not like where it ends.
Right. You don't understand.
stcharleswealth.com is the place to go. And Mr. Rock Lobster, sir, I know you haven't done Portillo's catering, but maybe you have an equivalent in Maine. And if folks want to reach out to you, talk about it, where should they go? What should they do?
Of course, I'm taking immediate umbrage because I was not invited to said Portillo's catering event. You cater. If you cater for somebody else, why do I care? Why do I care? Why do I care about that? I only care about me.
It was more to rub Uncle Mike's face in it than anyone else's.
Take that. Anyway, go to optionpit.com. We're running a special on our Trading Legion, which is what I would call our introductory, but all my students say, Andrew, this is not introductory options trading. It is advanced options trading. So running a little special on that. So we have kind of like live teaching every day, almost every day. All kinds of goodies come with it. So check out optionpit.com, Trading Legion, go to the memberships tab, or just catch Mark, because I think we barely see him anymore. All he is on TV telling people about options and stuff like that. So Mark, he's just everywhere. Just turn on the TV and you'll probably see his face talking about options.
Then maybe turn it off again very quickly because no one wants to see that. That's why we do an audio show, listeners. Optionpit.com is the place to go. On behalf of the rockingest of lobsters and the unklest of Mikes, and indeed myself, thank all of you out there for downloading, streaming, subscribing, for listening live. See you back in a little bit for TWTR, and then back again tomorrow, noon Central for Vol Views. For the pro folks, after that, Options Oddities, 2 p.m. Central, and then back again next Monday, another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.